Everyone, this is Rob Roy, and welcome to the LA Wave Options U.S. Market Update. Boy, in our weekend update, we talked about how the Federal Reserve's hawkish tone last week had created a bloodbath in the markets. I think that was some follow-through today, which would count in that bloodbath scenario. But interest rates actually went down today. Why did the market sell off so hard? And Bitcoin broke 40,000. Where's the next level for it? Let's take a look at the charts. At the time of this recording, it is 10:30 p.m. on Tuesday evening, and currently the futures are up 10.5 points. If you take a look at the chart of the S&P, you can see that, boy, it was an ugly day today, closing on the low of the day and breaking that 420 level. That's held as support back in January, in February, and in March. Is it going to hold again, or are we going to break it this time? Currently, we are a bit oversold, closing on the low from where the 10-day moving average is. You've heard me say it before, no security in any time frame gets very far away from the 10-day moving average, but this downward zigzag that we've talked about for quite some time is still firmly intact, with a low down around 392 on the SPY. So that's a bit lower from here, and closing below 400, which would fill that gap going back from a number of months ago. When you have a move like this, you want to see the volume. You can see that above average volume again, but note that a slight decline in volume on the selling that we've had. Yesterday we did have that reversal day, but still moving below the 10-day moving average, even on the high and the close of the day. So perhaps we're due for a little bit of an oversold bounce, if nothing more, bouncing back towards the 10-day moving average. Could we get back to 440? Probably not. Probably more in the 430 range would be something we'd look at, and then we'll see where things go from here. But it does look like eventually that 400 level or below is the eventual move in the markets. In the intro, I said that interest rates moved to the downside today, and yet the market sold off so hard. I don't think that's a very positive, as far as you would think that if interest rates went down, that'd be a positive for the market. So is it the rhetoric out of China, the more concerns about China lockdown? Is it the talk of someone out of Russia saying that, hey, nuclear is an option in the war there? What caused the market to continue to go to the downside so significantly with interest rates moving lower? Well, you can see interest rates moved awfully vertically to the upside. We said that once we got to around 3%, perhaps we'd have a pause. We didn't quite get there, but we got awfully close. A little bit of a pivot point on the high there, just below the 3% level. And we closed below the 10-day moving average today on rates. When you look at the moving averages, you hear me talk about that no security in any time frame gets very far away from the 10-day moving average a lot. Same thing applies here. The 10-day and the 50-day don't separate significantly for very long either, and you can see there's really good separation here. So in my opinion, these two need to come back together. The 10-day and the 50-day need to get closer together. I don't necessarily think it's going to be just moving sideways, which can occur when there's an overbought or oversold condition from the 10-day moving average. I think the 10 and the 50 means that there needs to be a bit of a reversal. So I think that rates could ease a bit more and bring the 10-day moving average down towards the 50-day. Does that give the markets a little bit of a bounce? It didn't today, but perhaps it does in the next couple of trading days, considering the fact that we are so oversold at this point in time. That was a pretty vertical move to the upside, so coming back down a bit in rates I don't think would be that surprising. We also looked at the dollar in tonight's TradeFinder, and I'll talk more about that in a moment, but look how vertical that move was in the past couple of trading days. Now, you've heard me say in all these updates that I'm a big fan of a strong dollar, and that's true, but note this 45-degree angle. I would like to see the dollar just kind of slowly move up there, meaning that it's staying as the currency of last resort, etc., and money is continuing to move in and stay supportive of the dollar. I don't like this vertical move. So we already were a little bit more vertical than the 45-degree angle, but going straight up like that means that perhaps we get a bit of a pullback in the dollar. But why do we go so vertically up? Is there something more sinister out there? Is there a black swan that perhaps we're not aware of that could rear its ugly head, if you will. Something is going on that's causing the dollar to go so vertically like this, other than just what we already know. That's why I'm suggesting a black swan. All the other things we know about the Federal Reserve, we know they're going to be raising rates, we know they're going to be withdrawing liquidity, we know about the war in Russia, we know about what's going on in China with COVID, etc. We know all these things. Is there something out there we don't know? I think that's something that could be interesting. Thought we'd look at the transports because we talked about that a while back as far as a leading indicator for the market downturn. We did get a little bit of a bounce. Note that we didn't really bounce as much in the transports as we did in the market. If you subscribe to Dow theory, basically that's a combination of the transports and the industrials. One leads the other. It can be either way. Transports lead the industrials or vice versa. And so we had this bounce there right to the 61.8% level on the transports, and heading back to the downside. No, we are not oversold in the transports. They can continue to go lower. There is some support right there in the 14,400 level, but if we break that, we could have a C-wave extension in this qualified zigzag all the way down to 13,254. That would not be a positive for the market. So can the transports hold around 14,400 is going to be the key. Oil continues to stay in this consolidating triangle, really well formed symmetrical triangle. Looked like we were going to break to the downside yesterday, but no, closed back on top of that lower trend line of higher lows, and then today right smack in the middle of it, oil's getting ready to make a move. Which direction is it going to be? When you have a symmetrical triangle like that, it can go either direction. You know, the pain we feel at the pump, we certainly wouldn't want to see an upside breakout, but it could happen. Natural gas is calming just a little bit. We had this blow off top. Moving down, we also have some separation here between the 10 and the 50-day moving average. We're not overbought anymore in natural gas from the 10-day moving average, but perhaps a little more consolidation, maybe a little more pullback is warranted here as the 10 and the 50-day moving average need to converge back together just a bit. I mentioned in the intro, Bitcoin broke 40,000. So you can see here that we broke below this level. The positive news is the 5-wave impulse pattern is no longer intact, but do we get a follow-through day? And the next stop is 36,000 on Bitcoin, and if that doesn't hold, then we're down to 32,000. You've heard me talk about the stair-step levels at $4,000 a piece on Bitcoin. It goes the same way to the upside. You know, we had 44,000, and then we tried to break above 48 and couldn't do that. So you see what I mean? Every one of the steps is at a $4,000 mark. So if we get a follow through to the downside, whether or not we hit 36,000 tomorrow or not, we're probably heading there. But can we bounce back to the upside and get back above 40,000? Again, not oversold on Bitcoin. You can see we actually traded above the 10-day moving average on the high. So also wanted to take a look at Canada. I feel like this may be one of the best looking charts in the market here as far as a potential bounce. Note the gap there and the gap there. And now we're also down here at support around 37. So if there's going to be a market that's going to bounce, if it's not our market, then Canada looks really ripe for a bounce to me, coming back off this 37 level, back up towards 39 and the 10-day moving average. Do we fill this gap above 39? We'll see, but man, we are really oversold on the Canadian market. And again, both of those gaps that likely will get filled at some point in time. But we did do a TradeFinder live tonight. If you haven't joined us for a TradeFinder, you should do so. We do it every Tuesday night. It's free. We talk the markets, we look for trading ideas, and then we open it up for a Q&A. And tonight, in tonight's TradeFinder, we had a couple really good questions. We had some questions regarding Twitter. What's going on with Twitter? Why isn't it trading at 54.20, which is the price Elon Musk said he would take it private? Normally when a stock gets bought out at the price that it's going to be bought out at, it just pegs there and is a straight line. It's like a flat line. But we're not there. We're trading actually a little bit below 50. Couple things here. Number one, we're a little above the 10-day moving average. But the fact that we're not trading at 54.20 is there's a little bit of a premium built in that perhaps something could go wrong with the deal. Maybe the government interferes, maybe the funding isn't quite as secure as Elon thought. Something may happen that the deal doesn't go through. That's why we're not pegged at 54.20. We could come down to this 10-day moving average. Note this big gap here. I don't think this gap gets filled if the deal goes through. Obviously, if the deal were to fall apart, then that gap gets filled. And Tesla, what has Elon done here? You can see that we broke this major support area that we had right in the $1,000 range, right in through here where we were trying to hold, and then big down day today. People were upset, dumping Tesla shares. If you take a look at the volume, look at that spike in volume. There is a concern out there that if Elon Musk gets spread a little too thin between SpaceX and Tesla and now Twitter, is he going to have as much time to spend on Tesla? So big move to the downside there. And if we look at the moving averages, again, we traded above the 10-day moving average on Tesla today. So we are a little oversold on the low, but we're also in an area here of support. So perhaps we get some sort of a bounce here, but just call it somewhere in the 850 to 1,000 range. Maybe we get range bound on Tesla now. But it was a really good question that was asked regarding the combination of Tesla and Twitter and Elon Musk's involvement. But this big volume spike suggests that perhaps we stay in a trading range here, bouncing between that 850 and 1,000 level. Now over the weekend, we did leave out the Nifty because of the fact that we added a couple of new international markets. We can't cover every market every week or these recordings get too long. And then there was a suggestion, can you look at the INDA instead of the Nifty? So I thought we'd go ahead and do that. Bring India back and look at this. And you can see here that really nicely formed symmetrical triangle is going to be breaking out, it looks like, in the Indian market. You can see the wave 5 was 129% extension to the downside, which means you are not likely to go all the way back to the wave 4. In fact, when you have a wave 5 extension above 100%, you're looking for a 61.8% corrective move, and we went just above that as we formed this triangle. So there's going to be a breakout in the Indian market, and is it to the upside or the downside? When you have a symmetrical triangle, it can break either direction, and the fact that we've already satisfied the 61.8% corrective move from this wave 5 low, again, adds to the fact that we could move either direction. Thought we'd end, as we always do in these market updates, on the VIX. Look at this vertical move in the VIX right back above 30. We talked about that over the weekend. Are we going to get back above 30 because we were trading here just below it in the weekend? Well, the answer to that is an emphatic yes. And here we are back up in the highs that we had during the last move to the downside. And that's an awfully vertical move to the upside in the VIX. And you know, again, how I feel about vertical moves. And all you have to do is go back and look. When you have these vertical moves in the VIX, often they come right back down. But I also mentioned that this was a pretty vertical move to the downside, and we could get another vertical move back up. And that's exactly what happened. So it doesn't matter what direction it is. When you get a vertical move, either direction, it's likely to go vertically back the opposite direction. Hope you have a wonderful week. Look forward to talking to you this weekend. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.